Costco reports earnings this week. Let's talk about if I think the stock is a buy heading into earnings. First, here's my portfolio. I'm down $1,000 today, almost 1%. Overall, we're down $4,000. I'm building a $1 million portfolio here. Started it on February 15th, 2022 with $3,000. Actually put $10,000 in. But anyways, we've put in $97,444. We're at $93,300. So we're obviously down. Here's the stocks I own. I own a lot of growth stocks here. I talk about them all the time. Purpose of this video is not to discuss my portfolio, but to show you I don't own Costco, although I think it's a fantastic company and I want to be a shareholder. And I'm going to tell you why I'm not a shareholder in just a minute. But just to show you how amazing this company has been, right? Since 2001, over the last 21 years, a $10,000 investment, if you would have put $10,000 in, it would be worth, you would have gained $193,000. So it'd be worth about $200,000 for a 15% compound annual growth rate compared to the S&P 500 at 8%. In dividends alone, you would have gotten $18,900 in dividends, especially if you reinvested them and it continued to grow over time. So anyways, Costco has been a great winner. The compound annual growth rate of the dividend alone has been 17% over the last 18 years. So if you would have bought back in 2004, this is the amazing power of dividends, right? The yield when you bought would have been 0.5%, right? But those same shares that you bought back in 2004, because the share price has gone up and the dividends have gone up, actually is the real reason they've increased their dividend over time. It's now paying a 12.88% yield on cost for your purchase cost of shares back in 2004 are now paying over a 12.88% dividend. So anyways, let's jump into the earnings expectations for Costco for this upcoming quarter, which they report on September 22nd, 2022. Expecting EPS normalized of $4.17. GAAP estimate, so that's generally accepted accounting principle estimate for EPS, $4.20. They're about the same. Revenue estimate, about $72 billion. And if we look at the company's historical quarters, their previous quarters, they beat on earnings and revenue almost every single quarter over the last, since 2017. They've only missed on revenue, looks like 3 times, and they've missed on earnings 3 times since 2017. Okay, so this company generally beats. All right, here's why I don't own shares. So if you look at the average PE ratio since 2001, the average PE ratio has been 26.7 with about 11% annualized earnings growth, okay? So if earnings is growing at 11%, the average PE ratio has been 26.7. Well, today the blended PE ratio is 38.48. For me, that's just too high, and investments go up either because earnings and revenue grow and the multiple stays the same, or because earnings and revenue grow and the multiple actually expands. So that would look like a PE of 16 growing to a PE of 20 while earnings and revenue grow. The risk for stocks, even great stocks, great companies like Costco, is buying them at too high of a PE ratio. And so right now, I just simply think Costco is priced to perfection. And so if it trades back to its normalized price to earnings ratio over the last, 20 or so years, you're actually looking at a negative 5% total return between now and August 2025, okay? And so that's the bottom line. I am a huge fan of Costco, but if we just look at where this stock has traded, it's really only traded at such a crazy premium since COVID happened, like a lot of stocks, okay? And it's come down a little bit, but I unfortunately think that this stock, as great of a company as it is, does have the potential to drop quite a bit just based on where it historically trades from a price to earnings multiple. And the other thing is, as companies get bigger, we expect the price to earnings multiple to actually come down a little bit because it's harder to grow earnings as fast moving forward. And so one thing to look at, we've got this annualized 11% earnings growth and the normal PE of 26. Well, for the next 3 years, 2023, 24, and 25, they're expecting 11%, 10%, and then 9% earnings growth. So actually a little bit below its historical average earnings growth, which is a reason that there's no reason, in my opinion, that this thing should trade over its historical PE when earnings growth is actually slowing down. If you're a Costco shareholder or considering shares, let me know down in the comments. Do you agree? Do you disagree? And then what company do you want me to cover?